Warm welcome, Chris, Chief Economist at Longview Economics, with us today to give his take on the recent development and the outlook for markets. You recently released your tactical allocation message for the next few months here. So what's your view on what happened last week in markets since we spoke last?
Yeah, I thought it was pretty interesting. I mean, markets remained pretty weak, as you saw. Morning, by the way. It's lovely to see you. Markets remained pretty weak. And, as I think we said last week, there's some key technical support levels being broken in these markets. You know, the big sort of magnificent seven, the mega cap tech stocks, take Apple, they've broken key trend lines. And I think that's really quite interesting. And there's a lot of spillover as a result of that. So markets continue to be weak last week. Led in the States, they were led by the semiconductor index. That was the Philly SOX down, which is down about 10, 11% month to date. The tech looks like it may be trying to find a bit of a short-term temporary floor, but really the direction was down tactically. If you're thinking on a multi-month basis, I think that's the trend now, and it's starting to look more and more established.
Yeah, we had some strong economic data also at the end of the week. What's your view on why the economy is holding up so well?
Well, you've always got to be slightly careful on month-by-month data, but yes, there's been some strong data, lots of things coming out last week, and as we were discussing beforehand, the nowcast is looking pretty strong on in terms of the third quarter, although we're only really just getting into third quarter data. We're only just getting July data now, so it's quite early. We get flash PMIs for August later this week, so that'll be quite interesting. And of course, August, July, summer periods can be slightly funny because of holidays and strange sort of things going on. But yeah, I mean, the economy's remained resilient so far. We continue to expect a recession. But that's certainly pushing bond yields high, and that's getting people excited about the economy. There's a ton of theories about why bond yields have been going up in the last few weeks, but it's really, really important because they're very clearly adding a lot of pressure to equity markets as those yields back up, particularly the real bond yield element of 10-year bond yields. And so that's a real big focus and something to watch very closely. And last week, we had the 10-year nominal bond yield back above its October 2022 highs, and basically making its highest level since the GFC. So a real big move in bonds since 2000. Since you remember 10-year bond yields were about 50 bips in August 2000, and now, of course, we're trading about 4.30. So big move there, very important for what equities are up to, and very important to keep an eye on and have a good sense of where bonds might be going from here. I think that's critical for equity markets.
Yeah. The other parts, that's one of the key items that you consider in the tactical allocation. Can you give us a brief overview on the other arguments that you have in your recent allocation update?
Yeah, I mean, our view is there's probably, I have this sort of throwaway line that only four things ever matter. I mean, maybe five, it may be three, it may be six, but you get the idea. There's four key debates going on in the world, in the global economy. And if you can work out what the debates are and where they're going, you get a pretty good sense, I think, of where key asset classes are going to go, where bonds are going to go, where equities are going to go, whether you should be defensive or cyclical or long duration growth, and where should you be in the commodity complex, industrials or cyclical industrial metals or precious or things like that. And those four key debates. So firstly, the one we just mentioned, are bond yields toppy here, or are they going to? So there's some in markets think they're going to push to 5% handle on the US 10-year or even higher, or are they toppy and they're rolling over? That's important for sector allocation and global markets. Second key debate is inflation or deflation. Obviously, there's a lot of chat about inflation at the moment, but actually there's some emerging signs of potential deflation. China's one example. They're already in deflation, but look at the last couple of months, inflation in the States, it's actually been negative on a month-on-month basis. Then the third thing we would look to is recession delayed or recession cancelled. We just touched on that. And then a final one is the outlook for Western housing markets and the outlook for the Chinese housing market, because Sweden's a tough gig. I understand that on housing, but you look in the US, there's a debate. Can it trough? These house prices, can they trough soon if we're going to get deflation and rates coming off? And then equally, and that's important for the economy and the economic outlook. And equally in China, is it, has a bubble burst in housing? I think it probably has. What will the policy response be? How big? And at the moment, it doesn't look to be too big. These are critical issues because at the moment, China's starting to export deflation. So those 4 big macro questions, if you can answer them, and they're the right questions, I think, but if they are and you can answer them correctly, you'll get a very good sense of where bond yields are going, equities are going, currencies, commodities, and so on. So that was our focus in last Friday's piece. Deep dive into those questions. Very interesting.
Yeah, it is certainly interesting. It looks like we're in for a volatile journey also this fall.
So far, yes, the summer's done what it often does. Whenever you go on holiday, markets sort of like to blow up, basically. And it seems to be the case this year.
Yeah, it seems to be the case. We also have earnings from Nvidia this week on Wednesday, in addition to the Powell speech on Friday, which are interesting. Events for the markets.
Absolutely. Yeah, quite right. Nvidia's critical. Last quarter, I think it was, they gapped up on their earnings, didn't they? It'll be interesting to see what they do this time. There was this theory that in 1999, Cisco gapped up on one of its earnings, moved up aggressively, and then disappointed from there on out. So will the Cisco pattern be repeated?
But
we'll
see.
We'll see. Jackson Hole as well. And I think the BRICS summit's really interesting. If you're into geopolitics, the world's becoming multilateral. The BRICS is emerging as the new sort of G7. So that's critical as well.
Yeah, absolutely. Okay, then I'm looking forward to speak to you soon again and updates on these recent thoughts.
Brilliant. Thanks, Stefan. Take care. All the best.
Thanks. Take care. All the best. Bye-bye.